Yeah. So yesterday we have started with modifications, correct? Na? Modification means we said it can be favorable modification or unfavorable modification, right? So favorable modification, favorable or unfavorable to employees, basically. Yeah. So modification can happen. That period can increase, decrease, or what is that? Number of shares may be increasing, decreasing, or exercise price may be reduced, increased. Correct, na? Yeah, targets may be reduced. Yeah, anything can happen. Any terms and condition change is equal to modification. Right. Now, the question is, all these modifications we have bifurcated into three. First one is what you have done, that is exercise price reduction. Correct. A modification in the exercise price. The topic is over. Yeah, yesterday, were you able to try that? Yeah, how much you got answer for this 13 sum, or is it clear first? 13 question not coming. 13th question. Question number 13, have you seen? Okay. Is it like not a big bouncer, no? Able to do it? That's all. So here that is what what is that? Normally what you will do, one third you will do and two third you will do, and this will be for the 0.5. 0.5 in the sense of what? 6 months. Yeah, 6 months out of 18 months. Yeah, you write with your pen like 6 months out of 18 months. 0.5 by 1.5. 0.5 by 1.5. Okay, current year it is 0.5. 6 months out of 18 months. Next year it is full 12 months. So 12 by 18 months you will be applying. That's all. Next time accumulated, na 18 by 18 will come. Right. That is what this is. If you have tried it, you will not find it difficult. Yeah. What about the next one, my dear? This one also. Um, which page, Dadu? Page number 18. Yeah. Page number 18 we already discussed, and we said with number of employees also, everything we have already, basic working is done. You just need to apply little bit of calculation. Right. Fine. Chalo, let's go to the situation number 2. We'll discuss this. What is situation number 2? Change in the number of equity shares. Okay. Yes. Situation number 2. Yeah. Change in the number of, change, modification, anything. Change in number of shares. Number of shares or options. Change in number of shares or options. See, change in number of shares means obviously what is favorable, what is unfavorable. Correct. Now, what is favorable, what is unfavorable? Unfavorable means what? Obviously decrease in the number of shares. Correct, na? Decrease. Decrease in number of shares. Initially, I said I'll give you 5,000 shares or something. Now I'm reducing it to 800 or any number. That is unfavorable. Okay, right. What is favorable? Favorable means increasing. Increase in number of shares. See, unfavorable, that is rare circumstance. It won't happen. Correct, na? If I promise you, I'll give you 1,000 and you started working with me. Correct. Now, after 1 year or 2 years, so if I say no, 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 500 I will give. Which employee will keep quiet? Correct, na? Okay, no problem. They will not tell anything upfront. Correct na? They will, if they get a good job na, then they will not wait for your 3 years time, or they will not wait for your 800 shares. When they get a good opportunity, jump. Agree or not? Yeah. But anyhow, accounting has to happen. As I say, right, accounting has to happen. We are supposed to do that. We'll do it. Next, if it is unfavorable, na, isn't it like a cancellation of 200 shares? Correct na? Say I say initially we promised 1,000 shares or 1,000 options will give. Correct na? You decreased it by 200 shares. You reduced it. Yeah, to the extent of 200. Can't I treat it like a cancellation? Cancellation is my next topic. After situation 3, we will get into cancellation only. Okay, right. It is treated as 200 shares are cancelled. In case of cancellation, what will happen? Yeah, we'll see. I mean, I have not taught you. I'm going to teach you that. Yeah, treat as cancellation, part cancellation, cancellation of SBP. Treat it as part cancellation of SBP. Okay, right. This is simple. Suppose initially I told 1,000 shares I'll give. Now I am saying I will give you another 200 shares extra. I'll give you 200 shares extra. Now tell me, suggest me what is better to treat. After a year or 2 years, so I'm saying that I'll give you extra 200 shares. What is better? Accounting. Initially I said 1,000 I'll give. Totally 3 years. After a year I am giving you, I'm saying that I am increasing 1,000 to 1,200. Huh? Will treat as a new grant to the extent of 200. Correct na? Old grant, old accounting do it na. New grant, 200 shares. What is the fair market value on the fresh day? Correct, a modification day, and that should be amount that should be charged over the new vesting period of 2 years. Correct na? Right, exactly. Treat as a new grant. Treat as a new grant. Treat it as a new grant. Hmm? Yeah, correct. New issue, new grant date. That is after 1 year, not the old grant date. 1 year before 1,000, I said. That date rate will be applying it on the 3 years. This is after 1 year. After 1 year, correct. The new rate you are supposed to take it. Yes. And consider fair market value. Consider fair market value of what? Fair market value of new grant on the modification date. And correct na? Yeah. Recognize expense over new vesting period. Old one is 3 years, new one is equal to 2 years. Right? Yeah, that's all. So it is not a new thing, and you don't need to try a new sum actually. Correct now. Old is old, new is new. That's it. That's why I would like directly go to situation number 3 first. Okay. Yeah. Situation number 3. Situation number 3. Any other modification? Any other modification? Yeah. But any other modification may, there is one small thing. Is it like market condition is changed? Other than market condition is changed. Market target. Suppose market price. I mean, I must have told you share of the market price of the share is equal to 500. You have to achieve. I told. Now I'm saying you don't need to achieve 500. 400 if you achieve also, I'll give you money. I'll give you shares. Getting my point? That is one. Other than market. Okay, right. Other than market change means vesting period is reduced. Correct. Now, other than non-market condition is changed. Anything other than that will all considered as residuary. Residuary. Yeah, here. Again, if it is unfavorable first, if it is unfavorable, treat as if no such change, no such modification took place. Treat as no such modification took place. Okay, just forget. I mean, even though there is something happened, forget, and normally you are charging it old granted date rate, something you are doing now, that only you close it off over the 3 years or 4 years, whatever, initial vesting period. That's it. Yeah, if it is favorable. Yeah, if it is favorable. Now, question. Yeah, what do I say? I will divide this into two again. Yeah, is it market condition changed? The other market condition changed. Yeah, he said other than market condition. Other than market condition change. Other than market condition. Other than market condition means example, decrease in vesting period, decrease in vesting period, comma, sales target reduced, etc. Yeah, here market condition change means decrease in share price target, decrease in share price target. Decrease in the share price target. Yeah, what you should do? In situation, if the share price target is reduced, treat it as situation number one. Situation number one means find out the incremental fair market value and recognize it over the remaining period of vesting. Hello? Yeah, treat as situation number one. Treat as situation number one. Yeah, that is incremental fair market value. Okay, whatever you did situation one, that's all. This situation decrease in the, I mean, all these things, they have not guided exactly. They said depending on situation you do it करके छोड़ दिया. Okay, right. Yeah, account for based on the situation. Yeah, if you see situation, you'll only get to know. Actually, it's not that difficult or something beyond. Nothing like that. You will be able to do it. That's all, my dear. This is about the modification. Modification may totally three situations. First situation is change in the exercise price. Second situation is change in the number of shares. The third situation is all other changes. All other changes may also market target price. I mean, market condition is changed. Other than market condition is changed. Market condition is changed. Directly go to situation number one. Other than market condition, yes, you can. You have to think and take a call over there. Got it? Right. So, chalo, shall we try? 819 sum. Yeah, 19 sum. It is same as question number 18. Okay. Assume that original number of options is equal to 100. Instead of reducing the exercise price, number of options are increased to 150. Fair value of the each additional option is equal to 50. Isn't it correct now? Simple. So, 100 options you already accounted. Correct. Another 50 you are supposed to account for. So, can you guys do it now? Yeah. Here, actually, this is, I think 17 it must be, no? Correct, no? Because 17 has issued the 100 options. Am I right? Correct, no? And what is the value of the option you said? 50. Oh, yeah. Assume original options are 100. Okay, fine. Yes. Continuation to 18 only will say. Anyhow, you didn't do this, na? Homework. Right. You did, it's okay. We'll do once again. What is that? Just addition, no? Yeah. This happened at the end of the first year, no? I mean, at the end of the first year or at the beginning of the next year, it doesn't matter exactly. Right? Will you be able to do now? Do it. Yeah. So, you must have done directly, I mean, the sum year calculation SBPR employee benefit expense. Yeah, year 1. Tell me what into what? Sorry? 905. 100. 100 options. 129. Sorry? Into 1 by 3. How much? 38 lakh. 91,500. Yeah. And obviously this is same number. 91,500. Yeah. Second year. Second year. 905 place mein how much will come? Sorry? 899 into 100 options into 129 into 2 by 3. Correct, na? Plus 899. Correct, na? 899. One second. 899 into 50 into how much new number? I also 50, yeah. Okay, 50 into 1 divided by 2. Correct, right. How much number? 88 lakh 55,150. Difference amount 49 lakh 650. Yeah. Third situation. Third, how much? 896 into directly 150 I can keep. Yeah. No. Different. How much is this? 100 into 129. Correct? Yes. Next is what? 899 into 50 into 50. How much? Okay, 6. Yeah, please. Number? 1 crore 98,400. And the difference comes to 49 lakh 43,250. That's all. All of you got, no? That's it, easy. Yeah. Let's try the next sum. I hope all of you completed. Look at the next sum. That is 20th sum. Solution is given already, but anyhow, just run through. And 21st, 22nd solution is not given. We'll solve it. Yeah. Shreyas Limited on 1st April 2015 granted 100 options to one of its employees with a condition to remain in the services for 5 years. Okay, right. Granted date fair value of each option is 500 rupees. Okay. The company expects the satisfaction of the service condition by the employee. That's it. However, due to ill health, the employee wants to take voluntary retirement on March 31st, 2017. Okay. Actually, we told him to work for 5 years. After 2 years only, he has to leave due to reasons. Okay. Which was informed by the employee on 1st January, and the committee in the meeting held on February 1st, 2017, they were decided to reduce the vesting period beneficial to employee before failure to meet the vesting condition. So you must have already booked for first year normal 1 divided by 5 you must have booked. Hello, correct? Yeah. Next what he said, reduction in what? Vesting period. What should I do? Book full balance amount, everything has to, we have to book it. Correct na? Here other condition. The situation oriented, what you did, you only told book everything, sir. Now we are reducing and we are asking him to leave only. That's all. Like that it works. Okay, when you see a situation, automatically idea will come to you. We don't need to tell that. That's it. So what is the amount you charged, my dear? Tell me. 100 employees. So, sorry, one employee, 100 options. 100 options. How much is the number per option? 500. Correct? Right. Into 1 divided by 5. That is equal to what? How much is the number? 10,000. This is for the first year. Right? Yeah. Only one employee. Na? Then automatically balance 4 lakh. Balance is how much here? Yeah. 50,000 means 40,000. Correct? Na? Yeah. Entire 40,000 you will be charging it in the next year. Am I right? Yeah. Obviously. No. That is equal to 100 into 1 into 500. That's all. You reduced it. Into 2 by 2, you want to put 5 by 5, you want to put, how does it matter? End of the day, you are going to give this many shares. Artha? Yes, my dear. Can I go ahead? Right. Entire expenditure for the next year is going to be 40,000 rupees. That's it. Question number 21. First, you read it. We'll solve it. Yeah. You read the sum? Yeah. Is it favorable or unfavorable? Unfavorable. What is happening? 150 options with exercise price of 500 rupees to employees on April 1st, 2014 with a service period of 2 years. Fair value of the each option on the grant date is equal to 750. The entity modified the option at the 31st March 15 by extending the service period to 31st March 2017. Actually 31st March 16 में होना पड़ेगा, but they made extended by 1 year. Correct. So at the modification date, management expected that number of options outstanding on 31st March 2016, that is the original vesting date, would be 130. Okay. But actual number of, what is that? The actual number of, on 2016, that is equal to 120. 16 only. But out of this, only 100 people were there at that 17. Yeah. What you should do? The original is what? 2 years. 2 years may you should charge it off. That's all. तो थर्ड ईयर चार्ज करने के लिए कुछ नहीं है, राइट? What do you do? Excess difference will be there na. 120 was there in the last year. Now it has become 100. 100, to that extent you are supposed to reverse it. Then it will be vested. Hello, understood? You must have made the SBPR for 120 people on 31st March 2016. But at the end of the day, when there is a vesting, how many people are there? Only 100 people are there. On 20 excess provision, reverse karo. Reverse karo. Not the charging it to retained earnings. It is not at vested. Vested yet to vest. Hello, understood? All right. That's all. You give the shares to those guys. Chalo. Yeah, here increase in the vesting period. What is the question number 21, page number 20? Question number 21, page number 20. Yeah, increase in vesting period. Yeah, unfavorable to employees. Yeah, here bracket from 2 years to 3 years. Yeah, so as per Ind AS 102, recognize the expense, recognize employee benefit expense, you write employee benefit expense as if there is no such modification. So no such unfavorable modification took place. No such unfavorable modification took place. Yeah, that is charge off over 2 years only. Charge off over 2 years only. Oh, 20. Yeah. Here on small point. Okay, fine. Yeah. Chalo, first year. I mean, you can directly write first year. First year employee benefit expense. First year employee benefit expense. Okay. Yeah. First year employee benefit expense. How many people are there? No? 150 options with exercise price of 500. Okay. Service employees are not given. Huh? Okay. Maybe one employee. Correct. Na? One employee, not a problem. Into how much? How many options? Da? 150 options. So, into how much? Sorry, fair market value how much? 750 into 1 by 2. That's all. Does it come? It comes to how much? 56,000. Nee, 1 second. Uh, yeah, 150 options means I assume it is like one employee ko one option, something like that. Okay. Yeah. One employee ko one option, that I don't know exactly. But the total number of options that is possible to be exercised. Yes, 550, 750 is the number. This is exercise price that I don't need right now. The entity modified the options at the 31st March 15. Okay. By extending the service period. Fine. At the modification date, management expected that number of options will be on 31st March 2017. Okay. This is modification date. Their modification date, which date? 2015. Correct. Na? Then you are not supposed to go by, what is that? 150 nahi lena na, you are supposed to take 130, no. Arey, on 31st March, first 4 is the 1/4/2014 E number of options exercisable and you understood. That is Y0 beginning. Correct? But you will pass journal entry at what? End of the first year. End of the year when you are passing, that day what is estimation you are supposed to consider. Hello, correct? So what you have done is not correct. What is that you did here? 100 you took. Then automatically answer will be wrong. How much are you supposed to take? Yeah, 31st March. This is the first year means 31st March 2015 ka data. Read the question once again. How much does it come? Answer. 48,000. 48,750. Understood, na? Day one estimation is equal to, but day one estimation is irrelevant to us, na? We never consider day one ka estimation. We never will consider estimation as on the first year ending, second year ending, third year ending, like that we will take it. Right. Y2. Y2 employee benefit expense. Yeah. Employee benefit expenditure. Y2 how many people are there? First of all, my dear, 120 people को आ गया. Correct ना? We thought 31st March 2016 में 130 will be there करके as first line. Next line, actual number of people on that this date is equal to 120. Correct na? So 120 options into 750 comes to, yeah, otherwise what I will do like this, minus 48,750. This is better. How much, Nana? 41,250. Yeah, I told one thing just now. What is that I told? 20 employees ka adjustment karna na. No, that will not charge it to P&L. We'll adjust it with the retained earnings. The reason it is, if you assume that no modification is happened, that means at the end of the second year itself is vested, na? Hello, correct. Now, after vesting, if there is any change in actual issue of shares or something happens, that should be adjusted with retained earnings. That is what we have discussed. We'll stick to same thing. Right. You write a note. Yeah. As we understood, there is no modification took place. I'm dictating. As we understood or assumed, right? Sorry. As we assumed, understood upar likho something. As we assume that there is no modification or no modification took place. Yeah. Comma. Yeah, it is assumed as vested at the end of the second year at Y2. It is assumed as vested. It is assumed as vested at Y2. At Y2. At Y2. Full stop. Subsequent change in number of options will be adjusted to retained earnings. Yeah, will be adjusted to retained earnings. Tell me Y3. Adjustment to retained earnings. What is that you will do, my dear? First, how many options you have done? 100 options. Into how much? 750. Minus it 120 into 750, how much? Calculate, use calculator. We should have made the table correct. Table best option. rather than this. It's okay, not a problem. What is this 90,000 means? You must have bought SBPR to 90,000 rupees only, na? Table में पता चलेगा perfectly. Directly our eyes will go, okay, it is there at 90,000. Correct? Yeah, observe here. Some people are somehow confused. Yeah, what we calculate is directly this one. That is the problem. Okay, na? At the end of the first year, how much is this? 130 options, 750 into 1 by 2, 48,750. Correct? Second year what? 120 into 750, that is equal to 90,000, and the difference is equal to 41,250. Correct na? Over. Yeah, but actual issue how much, amma? Yeah, actual issue is equal to how much? 100. So actual cost is equal to, correct na? That is equal to 750. 750 means how much? 75,000. That means, are you supposed to do minus 15,000 rupees? Correct na? Minus 15,000 rupees to retained earnings. Have you understood? E 90,000, E number 100 into 750, 75,000 आया, minus 90,000, that is equal to old SBPR. We are not using everything. Hello, correct? Yes, exactly. So shall we write journal entry for that? What is the journal entry? SBPR account debit, retained earnings. That is equal to 15,000, 15,000. So SBPR balance, yeah, at Y3 is equal to 75,000. 75,000. Yeah, how many people got it? 100 people have got it. Correct. Now, face value have they given? Not given. Correct. When they issued, yes, you write journal entry. When shares issued. When shares issued. Journal entry when shares are issued. First cash account debit. 100 into 500. Correct? 500. 50,000. Yeah, SBPR account debit. 75,000. Yeah, two equity share capital. 125,000. I don't know face value and etc. Entirely I'll put it under this one only. Okay, ಅಷ್ಟೇ. ಯಾರಪ್ಪ? Someone called. No, no. If they reprice the 50 rupees, fair market value you will not do. You can change the any terms and conditions, then value will have impact. You can't change it. No. Market conditions will change on daily basis. Exercise price. Exercise price reduction. Fair market value illa. 500 rupees they can ask you to bring 400 only sufficient. If you consider that, only should consider, yeah, he is asking, suppose if 500 rupees they are asking the exercise price, Correct. Now, exercise price reduced by 400. Then you consider only E modification happened, not the other modification. Hello, understood? There are two things. One is unfavorable modification, one is favorable modification. If so, right. And the answer is what? Unfavorable hai to nahi hoga. I mean, it never happened only karke you have to do it. Ignore that. Means over the 2 years only, yes. E modification of 500 became 400. Then again you have to tell me incremental fair market value. You have to calculate and tell me that will be charged in the second year. That's all. Okay. Yeah. Chalo. Let's go to the last sum of this topic. Question number 22. An entity grants 100 share options to each of its 500 employees, provided that they remain in service over a period of next 3 years. The fair value of option is equal to 20. Okay. During the year 1, 50 employees leave. Okay. Year 1, they left, first 50 jump. Yeah. The entity estimates that another 60 will leave in year and 2. Fine. At the end of the year 1, the entity reprices the share options. Okay. Because share price has fallen. Yeah. I mean, reprice the share option in the sense exercise price is reduced. Correct. Now, this is exercise price reduction. Exercise price reduction. Yeah. The other vesting conditions remains unchanged. Okay. Yeah. See, I told you now. When I ask you, Ray, bring 500 rupees, you bring. Share value way high. When it was 2000 rupees, now when it was 2000, when you ask the employees to bring 500, makes sense because they're enjoying 1500 rupees of benefit. Suppose E2000 fell down to 1000. Okay, they will get benefit, but small benefit will come. Small benefit cannot motivate you to stay for 3 years. Correct? Na? So if some other employer asks you, I'll give you good hike. Why should I bother about it? I'll go for good hike only. That's the reason. Okay, right. At the date of repricing, the fair value of each original share price option granted is equal to 10 rupee. Okay, the fair value of each reprice share is equal to 15. That means incremental value is equal to 5. Correct? When are you doing this? At the end of the year 1. It doesn't matter. Will you charge it for the first year? Will you charge it for the next year? Only 2 years, second year, third year charge will come, but not for the first year. During the year 2, 30 employees left. Fine. The facts numbers are given. They estimated that further another 30 will leave. Next year, exactly 30 only left. Right. Calculate the amount recognized in the financial statement each of the 3 years of the scheme. Isn't it same thing? Correct, na? Okay, you try it home only. Same thing. There is no change at all. Correct, na? This is homework. No new element. Exactly. Correct, na? Right. Chalo, now cancellation or settlement during the vesting period. Cancellation or settlement. Yeah. See, simple thing. First, cancellation means not something different or difficult. Cancellation means what? First of all, when you say you are under which topic? Equity settled SBP topic. Correct now. I gave a right to you, or I said I'll give you the shares or share options to you once you satisfy the conditions. That is what we spoke. Now when I cancel it, hey, I don't need to. I will not give you. Buy. This should be treated as buyback of the right. What is it? Because SBPR is already sitting in where? Reserves and surplus. Yeah, it is not in the name of equity share capital, but it is going to become equity share capital very soon. Are you getting my point? We should treat this cancellation as buyback. Buyback. Now, listen, practically, just imagine. You guys worked with me for so many years. Right. I mean, I asked you to for 3 years you work. 2 years you work, 3 years you work. Last minute I am cancelling. Hello, understood? Alright, what do you will you feel bad or not? So that's why. But if you feel bad, it's problem to me also, na? Correct. So that's why what do I do? Compensate karo. Correct na? Compensate karo. How the compensation can happen? कैश दे दो. Hello, getting my point? Cash दे दो. But little bit compared to the market value. Normally what happens? You know, market value of the option is equal to 100 rupees. I'll give you 110 rupees, man. Don't be worried. Correct? Huh? You already have the other cash. 500 rupees I asked you to bring. Yeah. Now market value is equal to 600. Getting my point? 500 you have to give me. Correct? Another 100 I will only give. Not 100. 110 I'll give. मार्केट में 600 रुपीज को शेयर मिल रहा है ना, गो एंड परचेज. नो, आर यू फॉलोइंग मी? यू आर कॉम्पेंसेटिंग विथ कैश. हाँ, कॉम्पेंसेशन 100%, नो प्रॉब्लम. बट हियर अकाउंटिंग कैसा करना सर? करेक्ट ना? ऑल दीज थिंग्स अकाउंटिंग, हाउ शुड आई डू इट? फर्स्ट एंड फॉरमोस्ट थिंग, if you are cancelling in the second year, assume full expenditure. First you should charge it off. Full expenditure. Suppose 3 years we thought initial agreement is equal to 3 years. First year completed, first year 1/3 expenditure is already charged. Second year में you cancelled it, then 2 years का expenditure should be booked immediately. Have you understood? First basic rule is what? 2 years का expenditure, book it immediately. Okay, now you created SBPR. Hello, correct? Now you are buying back. What are you doing? Buying back. So now SBPR account debit to cash. Are you getting my point? Right. That we will apply. Yeah. No, sir. SBPR number, itna number hai, sir. But I am paying more than that. Are you getting my point? You can apply security premium account also, no problem. If you have any. Right. But one more point is given. I am telling you orally. If you catch it, fine. Otherwise, while writing, once again, I'll repeat. Na? That time, 100% you'll understand it. Market value of the share or market value of the share option is equal to, say, 100 rupees. But I am compensating you 120 rupees. You're getting my point? Market value of the share or share option is how much? 100. But I am giving you more than that. Up to 100, I'll understand it is buying back of the share. Correct? Now, if my company only goes to market and buys back, I will pay how much? 100. But am I giving 20 rupees extra? What should I do with 20? Expense off. Perfectly said. Okay. Employee benefit expense में book करो 20 rupees. Up to the fair market value of the share or share option, it is treated as buyback of right or SBP. Hello, understood? If you have paid any amount more than that, that is called as expenditure loss. Correct? It is an employee benefit expenditure. Charge it off to profit and loss statement. Hello, understood? Next point. Sometime what can happen? ESBP, I'll take it back. Okay. As a replacement or not as a replacement, one more SBP I'll give it. A better SBP I'll offer. Hello. Are you understanding what I said? I said, 3 years you are supposed to work. Okay. Second year itself, what do I say? First year, original agreement mein bola, 500 shares I will give. Some terms and conditions I said. Next situation mein what I say? I am cancelling the old one and coming with a new SBP. Getting my point? New SBP mein what will happen? 500 shares mein 600 shares or 700 shares, so exercise price lower, all so many changes karke I can give you a better option. I'm not increasing the vesting period to 3 to 4. No, I'm not doing. Maybe 3 only. You are happy. End of the day, people are. I have to make you happy. That is mandatory. Hello, understood my point? Like this, it can happen. When I cancel the old one, I may come out with the new one, which may be more beneficial to you. Hello, understood? Under that circumstance, again, 2 standpoints of view will be there. What are the 2 standpoint of view? Are you taking the new SBP as a replacement of old one, or it's a fresh? Are you getting my point? Yeah. So accordingly, your accounting treatment will change. Again, sometimes what happens? One more way, one more alternative to settlement. So for settlement, 2 ways I told. First way is what? Give cash and close it. Second way is what? Give a new SBP and close it. Third way, mixture of both. What is mixture of both? Partly cash pay karo and one more SBP leke aao. At the end of the day, it is favorable to you only, obviously. Correct. Now, what is lost to you? No loss. Thoda paisa bhi aaya right now, and I got a SBP, maybe lower, but if you take together na cash plus new SBP both le liya, to compared to last SBP, I am in a good position. Then what is the problem to these guys? Cancellation to normal. I told you already in some of the companies what they do. Correct na? See, simple thing. If I have my existing number of shares, is equal to 1 lakh. Correct na? If I issue shares to E 1 lakh is held by say A and B, two guys, private limited company, two guys. If I give shares to all of you, are you getting my point? As per the agreement, I should give another 1 lakh shares. Hello, understood? So right now I have 50 percentage, 50 percentage. If I give additionally another 1 lakh shares to all of you together, put together, hello, understood? Then what will happen? Total shares of the company is equal to 2 lakh, held by A shareholder only 50,000. Correct na? This will come directly to 25 percentage. 25% को ले आ जाएगा. The more the shares you issue, automatically existing shareholder का percentage will fall down. Isn't it a problem for them also? Earlier these two people will decide. Now you all people will join. That's why mostly what these private limited companies they'll do na. What they do, right? They will take back. Last minute में what they say, third year achieved na, right? 3 years complete किया, target complete किया. I'm cancelling what did I say? Cancel this one. Okay, SBP cancel कर रहा है. Don't worry, right? What is the value of it today? Some X number. 10% extra दे देंगे आप. Employee is also happy. That's all. Like that, people will play with it. Cancellation is not rare circumstance. Cancellation is normal circumstance. They don't want to give the share. Namesake will say we'll give share, but doesn't matter. End of the day, employee also happy. He's getting cash. If he wants to buy the share, he will buy. Correct na? He wants to go for a trip, he'll go. Why not? Correct no? Cash de diya to that his choice is too much now. Correct na? Share diya to let me hold. They'll hold it. Right. Chalo. Let me document the same thing and you also copy. Right. So how many settlements I told you, my dear, totally? One is by way of cash. Next is by way of new. New may be replacement for old, or you may treat it as independent one. And third one is what? Combination. Correct? Right. Actually, the second and third also you can club and do it. But anyhow, I'll do separately. Okay, na? That will be better for you. Yeah, cancellation. Yeah, cancellation of SBP. Yeah, the first and important point, star. What I taught you, when you cancel it, full entire expenditure should be recognized immediately. For the remaining vesting period, what you record it, immediate. Cancellation ho gaya na. There is nothing expenditure for next year. That's all. Can you write one line? Recognize immediately. Recognize the remaining expense. Recognize the remaining expense immediately in the year of cancellation. Yeah, right. Full stop. So no further expense to be recorded in the next year. Just add continuation. No further expense to be recorded in the next year. Yeah, below you write. Next point. Employee may be compensated by three ways. 1. Yeah, by paying cash. 2. By issuing new instruments, new SBP, by issuing new SBP, public instrument. 3rd, combination of cash and new instrument. Yeah, full stop. Come out and next line. Yeah, it should be treated as, it should be treated, entirely cancellation and compensation entirely. It should be treated as buyback of equity. Buyback of equity. Right. Yeah. Situation 1. Situation 1. Cash payment. Cash payment as compensation. Cash payment as compensation. Yeah. What do you do now here? You already have SBPR, na? Right. So it is like first a buyback. When you say buyback, yeah, in case of buyback, what do you do? SBPR account debit, security premium if required, that account also debit. Correct. Now to cash, you are closing it. Done. Because there is no equity share capital as such like debit करने के लिए. Done. Over. And what is that? Any payment excess of, what is that, fair market value of the option or share will be treated as expenditure. Yeah, not buyback. Okay. Any payment, any payment in excess of fair market value of option or share, right, will be treated as employee benefit expense. Yeah, bracket में P&L. Bracket में P&L. Okay. Yep. So now what is the journal entry? Proposed journal entry. SBPR account debit. Okay. If required, security premium account debit. Look at the board. This is up to fair market value. Correct? Yeah. Employee benefit expense account debit. This is something above fair market value. Right. To cash. Okay. Right. Right. Situation number 2. Yeah. Situation number 2, what? Issuing new SBP or instrument. Issuing new SBP or instrument. Yeah. Is it considered as? Is it considered? Considered as? Is it considered as what? Two things. As replacement for old SBP, right? Not a replacement. Yeah, if you do that means there is only that is what is this? It is a management discretion. Do you want to take it or not? Okay. Yeah, got it. Right. Huh. So this is, I mean, you treat as a fresh one, treat as a fresh grant, and follow normal, follow normal rules. Means you know that, correct? Na fair market value of today, fresh grant, how much is the vesting period, everything. Generally, what happens? They may issue a new share right now. Share they may issue, SBP they may issue, or maybe with hardly work for 1 month or 2 months or something like that, or don't work only. It's vested. I'll just give you little later. Depends on the new terms and conditions, fair market value, find out and charge it off. Correct now, or the vesting period, all fresh. Forget about old one. Don't link it with old one. It is a fresh thing has come. See the terms and conditions and accordingly record it. That's all. Okay, no link. So there is no problem for you. Right. Next, if it's a replacement, the minute if you say it is a replacement, what do you do, my dear? Replacement in the sense, again here also like incremental fair value you are supposed to catch. Yeah, incremental fair value means what again? What is the value of this one? Replaced SBP fair market value on the date of replacement or cancellation. Hello, correct? Minus old one, old one fair market value. Old SBP cancel हो गया ना, आ fair value, आ difference is there, no? आ difference you are supposed to charge off because old one का पूरा charge किया ना आप already. Something was second year, third year pending, पूरे ये भी charge कर दिया ना. That's all. So that will be charged over the remaining period. Yes, calculate, compute or calculate, compute incremental fair value, incremental fair market value. Yeah. How do you do incremental fair market value, my dear? Fair market value of replaced equity, replaced equity or SBP, anything, minus, yeah, fair market value of cancelled SBP. Okay, right. E number. Huh? Huh? On cancellation date. Cancellation date. See, any one basic thing, both should be on the same day. We don't take 2 days. Incremental in the sense that comparison there, same date should be there. Okay, na? Oh, that is also cancellation date. This is also first one, second one. Both are on the same date. Maybe terms and conditions are different. Correct. That is, that date option is closed. This is a new option has come. But fair value of the old option you have to take. Even in the incremental fair value of the last sum, situation number 1 modification also, what did you take? Fair market value of the modified repriced share option on the date of modification minus fair market value of the right now fresh rate of the old terms. Here also same, fresh rate of the old terms, old, I mean cancelled situation. Yeah, this will be charged automatically, correct? Yeah, this will be accounted for. Yeah, accounted for. Accounted for is sometimes immediately. Yeah, immediately. or depending on vesting period. Yeah. See, if I give you cash also, na, what happens? Na, I'll tell you. Sir, suppose I am giving you cash also. What do you do? Second, third situation. This situation over. Understood? This situation over. Third situation is what I told you. Combination. Correct? Na? Cash and instrument can be given. Under that circumstance, simply what do you do? E number में net fair market value you are supposed to take it. Right? You write better. Yeah. Situation number 3. Yeah. Combination of cash and other instrument. Yeah. Again, when I say other instrument, they may give a share. They may give a share. Share itself they may give, not SBP alone. It can be SBP, it can be share also. If they give share immediately, then there is nothing to be charged over a period of time. There is no vesting period, there is nothing. So directly charge off. That's why if you remember above, top mein kya bola main? What did I say? Charge off immediately. When directly share issue kiya to kya hai problem? Are you getting my point? Huh. So, right. If this is like no SBP is given, and then vesting period of a terminology will come. Right? No vesting condition, nothing. Yeah. Immediately I am settling it everything. And then immediately you should charge it off. Right? Right. But based on all these things, there is no question in the institute material. Nothing is there. Okay. But just remember first 2 points only. Mostly the cash situation will come in the exam if they ask for something. Okay. Right. So now, what is that combination of cash or other instrument? What do you do now? Right. I'm saying situation. This is same as above. I mean replacement, non-replacement, not treated as replacement, not treated as replacement means consider as a fresh. Something I wrote on the top na. E paragraphs. I am trying to tell both are same. Nothing. Okay. Right. Next. What do you do? Considered as replacement. Yeah, again, here also I will say compute incremental fair value. Incremental fair value. Now, incremental fair value is equal to what, my dear? Fair market value of replaced, replaced, what is that instrument? Equity or SBP. Same sentence, above, copy paste. Minus net. Yeah, this is the one. Net fair market value of cancelled one. Yeah, this you charge off immediately or over vesting period, if any, obviously. Sir, net means what, sir? Net means fair value, correct? Na fair market value of cancelled SBP before cancellation. Some number minus cash paid to employee. This net. What you give to them, cash de diya na, number you reduce it from, number you reduce it. That number this is also loss for you, that is also total loss to you. That's all. Actually, that's what I told. I should have written here, and here itself net likh sakta. If cash is given, minus will come. If cash is not given, zero will come. Like that, I could have closed it. It's okay. But I felt you may be confused or I may be confused, right? So that's why I cut into three parts. Otherwise, you can make it into two parts. That is more than sufficient. Okay. Shall we go ahead? Yeah. Can you go through once? 2 minutes, just run through. Let us handle this sum. Question number 23, 24 related to cancellation. Right? So, question number 23. On April 1st, 2015, Harsha Limited makes an award of 150 shares to employee with a condition that he should be there for 3 years. Okay. Fair value of the grant is equal to 1,50,000. Okay. Grant date. Fair value is equal to 1,50,000, not per option. This is the total fair value. All 150 shares together. Yeah. The award is expected to vest as he is expected to satisfy. Okay. Yeah. Now, however, the award is cancelled on 1st April 2016. That is next year beginning. Settlement is done in cash on pro rata basis. Pro rata basis. Pro rata basis means what? How many years I asked you to stay? 3 years. Correct na? So 3 years, but you stayed for, so far how long you are there? 1 year only. Correct na? So 50,000 I'll give you. 1,50,000 that date na? Hello, understood? 50,000 I'll pay you. No problem. That's up to them. The fair value on the cancellation date, actually, it came down to 12,000. Real instrument value came how much? 12. But still I am giving you how much? 50. That means 38,000 rupees is excess I am paying over and above fair value or not. That 38,000 should be charged to, that's it. That should be charged to P&L. Have you understood? Right. Chalo, let's, that's all. Calculate the amount of expense to be recognized in every year. Okay. Yeah. Question number 23, page number 21. Yeah, first thing, first year you have done normal. Hello, correct? Right. Recognize. Yeah, you write cancellation. Cancellation and compensated by payment of cash. Right. So, first year, which date, Amadhu? 31st March 2016. Directly expense record. What is that? Employee benefit expense account debit. Employee benefit expense account debit to SBPR. Yeah, how much, sir? Very simple. 1,50,000 divided by 1 by 3. 50,000, 50,000. Okay, right. Next, on 1/4/2016, next day. First thing what you should do? Charge off the remaining. Correct, na? Right. Charge off remaining. Yeah, as EBE, employee benefit expense. How much, Amadhu? Total worth is equal to 1,50,000 minus already you charged off in the last year. 50,000. So 1 lakh rupees should be charged off now. Journal entry. Normal, other entry. Employee benefit expense account debit to SBPR 1 lakh 1 lakh. Yeah. Listen, again, same 1/4/2016 only assume. Compensation paid. Compensation paid. Yeah. Compensation paid how much? That is equal to 1,50,000 into 1/3. 50,000 rupees you are giving. Tell me, propose the entry. What entry would you like to do? Huh? I didn't get, I couldn't hear. Employee benefit expense to cash. How much? Then where are you treating the buyback? Buyback should be what? What is the journal entry I wrote sometime before? SBPR account debit, security premium account debit to the extent of together. A security premium, if required, use it. If you don't require, don't use it. That's not mandatory. To the extent of fair value. What is the fair value here? 12,000. But you are paying how much? 50,000, 38,000 should be charged to P&L as employee benefit expense. Correct? Right. You write again once again. To the extent of fair value, fair market value of option. Yeah. Use SBPR and SP security premium. Bracket में if any. Okay. Right. And any excess paid over and above fair value, yeah, should be charged off as employee benefit expense. Should be charged off as employee benefit expense. Entry please. SBPR account debit 12,000. Correct na? Employee benefit expense account debit 38,000. Yeah, to cash 50,000. So SBPR balance 1,50,000 was there, 12,000 use किया, 138,000 will be still there. Correct na? Transfer to retained earnings. Yeah. So SBPR account debit, retained earnings 138,000, 138,000. Yes, my dear. Right. Yeah. Go to the next question and we'll finish that. We'll see first what is there. Question number 24. Fair value of the option estimated is equal to 130. Estimated number of directors to vest is equal to 8. Number of options for each director 2000. During the year 2, there was a crisis in the company and management decided to cancel the scheme immediately. It was estimated further as below. Fair value of the option at the time of cancellation E number. Market price of the share at the cancellation date was, yeah, what are you cancelling first? Option share option means why has he given market price of the share also? Illa payment illa, that is a biscuit. Correct now. What are you cancelling? Tell me. Option fair value you should take. Share cancellation, share value you take it. They will give sometime unnecessary information that is relevant to me. Okay, na? There was a compensation was paid to the director, only 9 directors. Okay, because 9 people, you expected initially 8 people, but yes, as on the date of cancellation, still 9 people are continuing. Correct. Currently in the employment. At the time of cancellation of such scheme, it was agreed to pay an amount of 95 rupees per option. It is payment. Correct. Na? From here to here, 5 rupees is a charge. Right. To each of the 9 directors. How the cancellation would be recorded. Okay, na? That's yeah. That is the question. So, how many years initially? Have they told something? Not told only, yeah? Yeah. Huh? No, 1 second. It is already 2 correct, but total number of years not given. Yeah, but don't worry, like this questions will not be in the exam. Okay, exam they'll tell here some errors may be there. Shall I take it as 3 years? Yeah. Assume vesting period is equal to 3 years. So, chalo, tell me first year. 24, 21. Yeah. So first year charge directly journal entry. Let's record it. Right. Employee benefit expense account debit to SBPR. Yeah. Y1, Y2 I like this. I am writing directly. Yeah. Here Y1. Y1 bolo yaar. What is the option? How many options he said? Per head 2000 and estimated only 8 people. Correct? Right. 2000. First estimation is 8. When they next year when you are cancelling, one guy did not leave as per estimation. Yeah. Into 130 na. Yeah. Into 1 by 3. 6 lakh 93,000. Okay. 693 333. Yeah. Second year is the balance amount. Balance amount. What is the balance amount, Nana? 2000 into 9 you should take now. Okay. Yeah. 9 into 130 minus is 693 333. How much amount? 16 lakh 46,000. Yeah. 16 lakh 46,667 is your charge for the second year. Then for the remaining. Now, what is the amount paid, Nana? 95 per item, correct? 95 per option into 2000 correct na, into 9 people. How much does it come? 17 lakh 10,000. Next, fair market value of option on cancellation date. Yeah, same 2000 into 9 into 90. 16 lakh 20,000. That means 90,000 rupees charge as employee benefit expense. Correct na? So to cash 17 lakh 10,000 SBPR, will write it employee benefit expense 90,000. Correct na? Balance number SBPR में रखो. That is obviously 16 lakh 20,000. Yeah, balance will be there SBPR. Balance SBPR to retained earnings. How much does it come? Sorry, 7 lakh 90 720. That's it. Yeah. If you see, the next thing is issue of bonus shares. Okay. That is not a topic actually. Small information. Hmm. What is that? See, they this issue of bonus shares will be like a small modification you are supposed to do to the existing. I'll tell you. Say example, Anna. Today, my company, say example, Reliance company, Infosys company, yeah, the one company, X company. Hmm. We have shares of, we have 1 lakh shares. How many shares? 1 lakh shares are there. Yeah. What we did? We offered a bonus. Correct. Before bonus, what we did? We have already have ESOP. Yeah. We told people, अरे बस, we'll give you 2,000 shares or 20,000 shares. Options को दे दिया. Yeah. When it was 1 lakh shares, na, my share price, that time it was 1,000 rupees tha. Good value. But bonus में क्या किया? 1:1 we issued bonus. When you offer 1:1, your total shares will become 2 lakh shares. Correct na? Bonus shares means what, Nana? Your reserves and surplus you are capitalizing as equity share. That's all. Correct na? Is it a new money coming? No new money. 1 paisa will not come. Just simply number of shares goes up. Then automatically straight away this price will fall to 500 nearby, somewhere it will fall. Market may God knows, sir. Especially whenever any company is issuing bonus shares, na, be alert and buy the share. You got my point? क्या बोला? Be alert and buy the share. How? Some people market में they'll be there and they don't even know. The bonus share, correct na? See, company value is 1,000 yesterday tak. The last 1 month it is stagnant. I mean, it's playing at 1,000. Adhe company, adhe share, no new information, no new income, no net worth increase, nothing. 1 share became 2. That means straight away it has to come to 500. Real value should be 500, na? Right? Suddenly it will come to 400 also, it will come to 300 also. People will become panic for every reason. Reasonable reason or not reasonable reason, I don't know. People will become panic. If you have some money, if you have brain also, yeah, you have brain obviously, right? Apply it. That's what I'm trying to say. You understood my point? When it becomes 300, it happens, huh? Suppose you have 20,000 rupees money. Example. 20,000 में 2 lots करो, 3 lots करो. I mean 10,000. Some shares will be within the range. Correct. 10,000 को कितना आएगा? When it comes 500 should come. It went to somewhere 450, 400 na. Purchase 10,000. If it falls further down, again purchase. Just wait for 2-3 days. It will come back to 500. Nearby pakka it will come back. Come out of it. Simple money, I mean easy money. But yes, so per day should be there. Yeah, don't put full net worth only. Correct. Na? Right. Yeah. You play with only 20. I mean your reasonable, comfortable amount. Correct. But end of the day, you will not lose. Loss in the sense may be there. So the worst circumstance. In my situation, whatever I have seen examples, there is no loss. Okay, it's a profit only. Just you should be, I mean, dare to do it. Whenever any company is issuing bonus, good company, kuch problem nahi hai na. Even if it falls, if not today, after 1 month or 2 months again, it will come back. For sure, it will come back. You will not end up with losses. If it is options and futures, na, that's very dangerous. That's very dangerous. If you don't know the correct game, na, don't enter. Especially options and future. If you don't know fully, then don't enter. Is SEBI report. I read that. Not 100%, that relevant paragraphs I read. SEBI, they themselves said 90% of the people made losses. क्या बोला? Future and options में who is playing the game? No. Per annum, they have taken full year, not one day. 90% of the people made loss. 7 to 8% people made hardly anything. Profit, but positive. अरे तुम्हारा investment 1 crore rupees, I got 1,000 profit means what is the profit? Correct na? That is okay. Only for namesake positive. Positive. That is not a number. Got my point? Like that. 7 to 8. I mean 7 to 8% people have made small profit. I mean not considerable, but they are into positive. At least they did not make loss. Only 2% people made the money. You understood? Whose report it is? SEBI. Recently, I mean some 6 months before, somewhere it came. It will be available in the Google and website mein milega. That's why I'm telling you, F&O, F&O, unless until I have the grip, I know this strategy, butterfly strategy, R strategy, E strategy. Yeah, there's so many. Correctly, if you know, correct na, small amounts you play, comfort mil gaya, 6 months play, not 1 day, 2 day conclusion, no. 6 months or 1 year play karo. बाद में थोड़ा थोड़ा increase करो investment. Directly jump, no. You will not come back. That's all. Go last day. That's very, very, very dangerous thing. F&O never play. Share na. Share hai to kya? It will be with me na. It will be in my demat account. If not today, after 10 years, I will sell. Unless until liquidity crunch is there. Otherwise, okay, let it be there. Got my point? At least share say paying is good. No problem. No serious issue. But F&O very, very dangerous. Listen, anyhow. Here, as per my estimation, what should come, my dear? Correct, na? 500 should come. But actually, who will become Bakra? Those employees will become Bakra. Correct, na? You must have told what to them? Right? I'll give you 20,000 shares. Correct, na? I said like 20,000 shares I will issue to you करके बोल दिया. Correct. But 20,000 shares you wanted to issue. That time it was like 20% of the shares. And by what is expectation? 20,000 into 1,000. So paisa, very good number will come karke. All must have be happy. But now e 1,000 will become how much? 500. Hello, understood na? Papa, exactly half it became. Now it demotivates them. Agree or not? 3 years mein already 2 years over. Last minute they did the bonus share. Share value fell down. And they became Bagra. Immediately. Correct na? Don't worry. Generally what happens, whenever the bonus issue is there, as per the SEBI guidelines also, You have to give bonus even to these guys also. What you promise them? 20,000, na? Correct. Bonus shares you have to keep it aside. You remember? I mean, bonus issue is there in term A. If you remember, if there is any ESOP already at the time of bonus issue, if there is any already ESOP is existing, na, you should दे रेशियो 1:1 बोला ना, इसको भी 20,000 शेयर्स नहीं देना, 40,000 देना पड़ेगा. हाँ, that is the small information. That is not accounting. Last day you will issue the yes, you will issue bonus shares when bonus share can be given only when the existing share na. First I should issue the share to you. Adhe kshana immediately next minute I will give you the bonus share also to you. For that we should keep some reserves ahead. अरे अंडरस्टूड है, मेरे पास इतना रिजर्व है, रिटेन्ड अर्निंग, जनरल रिजर्व, ये कुछ है, आई कैनॉट यूज फुल अमाउंट. ओके, ई 1 लाख शेयर्स के लिए थोड़ा रखो. And for the other person, because these guys are in the very near future, they'll also be, it will be vested. I have to give the shares for them. That time you cannot tell I cannot give you bonus share because मेरे पास रिजर्व नहीं है, ऐसा नहीं बोल सकता. You have to keep aside the reserves. So when share is issued to employee, that minute bonus share also will be given. Otherwise, papa, they will be unnecessarily bakras. Correct na? That will be demotivating them. Correct na? That is like a cheating indirectly. Indirectly cheating only na. Right. So that is a small information. It is not accounting or it is not anything else. Chalo. We are now done with the topic number 1. Okay. Topic number 2 also will, that is a small, I mean explanation wise topic number 2 is small one. Nothing great. Topic number 2 I will complete it. Sums will do it and we'll go to question and answers towards the end. We'll see. Solutions are given in few cases. At least we'll solve. Calculator use करके solve करेंगे. Hello, understood? You'll feel comfortable. Questions from topic number 3, topic number 4 are less frequent compared to topic number 1 and 2. But people do ask from there also. 3rd and 4th also question will come, but less frequent. Got my point? Right. Chalo. Recently in the sense, not last attempt. Last attempt mein no question from ESOP came. SBP didn't come. This attempt, I mean May 2023. But before that, yes, there was a question. Our question was from topic number 3, if I remember mostly. Topic number 3 se aaya question. Are you getting my point? But that is not that great frequent. Chalo. Topic number 2. Yeah, topic number 2. Cash settled SBP. Cash settled SBP. Yeah, for this another name SAR, SARS, SARs. Yeah, what is SAR, my dear? SAR is share appreciation rights. Right. SAR. Yeah, if they use the word SAR, if they use the word cash settled SBP, both are one and the same. That is another name. That's all. Okay, na? What is this, sir? Very simple. Okay, right. Already we discussed cash settled SBP means what do you give? Yeah, company gives, right? Company gives cash or other assets based on share price or option value on the date of settlement. Yeah, on the date of settlement. Yeah, how much you will get, do you know today? It is not a fixed amount. Yeah, amount payable is not fixed on grant date. Amount payable is not fixed on grant date. Correct na? It is not fixed. Underline at least not fixed on the grant date. Yeah, it will be depending upon the share price on the last date. Which day you want to settle, that day we'll see. Yeah. SAR means simple, na, I'll tell you. Example. Yeah. Today is right. Grant date. Yeah. Grant date, sir. 1/4/2022, sir. Nice. Yeah. Today's share price. How much, sir? Sir, say 500 rupees is the share price. Okay. Sir, exercise price. Exercise price is equal to 100 rupees. Yeah. Vesting period. Vesting period is equal to 3 years. That is equal to 31st March 25. Vesting date 31st March 25. Okay, na? Right. Now what do you do, Nana? Suppose this is the vesting date, this is the settlement date. Both assume vesting and settlement. Vesting date, settlement date. Both. Yeah. How much is payable? What is payable, my dear? What is payable? E date fair market value. Yeah. Say example 1050 rupees is the fair market value of the share after the. Hello, understood? Fair market value of share. Assume share or share. Yeah, because I have taken share here. Continuing with the same. What will happen here, my dear? 1050 is the share, na? How much you will pay? Payable to employee. Hmm? What do you pay? पैसा कितना पे करेगा? 1050? 1050 will not give. Minus 100. 1050 is the share. If I give 100, he has to pay, na? But anyhow, cash transaction. I will give cash, he will give cash. Why to give and take cash? Give 950. That's all. So that is fair market value on the date of settlement. Fair market value on settlement minus 100 EP exercise price 950 per share. Yeah, how many shares I promised? Into number of shares you multiply. You are eligible for 1000 shares. 950 into 1000, 9,50,000 de do. For each employee will decide it. Now read the SAR. SAR meaning kya? Share appreciation right. Means what? If the share value appreciate over and above the exercise price, it will be paid in cash. Over and above exercise price, whatever it is gone up, okay, then you are entitled for that money. Over and above 100, not from the date today 500 to 1050, na 100 over and above, that will be given in cash. Next, yeah. So first, is it a liability na equity na? Is it liability or equity to entity? Liability. Correct na? Equity means, are you giving equity share capital? No. Are you getting something free? What am I getting? I am supposed to pay. Correct na? It is liability. It is liability. SBPL, that is SBP liability. But here what happens? Na? Simple, understand it. You only observe and apply brain. This example I'll see. Granted date share price how much? Nanna? 500. Totally how many years? 3 years. Correct. See, granted date if I pay, I would have paid 400. Correct? How? 500 minus 100, 400 I should have paid. Agree? Yeah? Right. But at the end of the first year, that is equal to 31st March 2023. Actually, fair market value of the share has gone up to gone up to 650 rupees को गया. Share value will fluctuate na. Fair value will automatically fluctuated to 650. Now how much should I do? Shall I take 500? Shall I take 650? Shall I take average? Question clear? Granted date 500 share value or option value. Today value is equal to, yeah, question में share दिया तो share ले लो, option दिया तो option ले लो. That's all. Okay ना? Don't be confused. Yeah, but be on this only one place. All share only, all option only. Jump to here. No, that is always not correct. हाँ बोलो नंदा. Now tell me. Never. We'll take correct na. 500 if you take, suppose example, as per you I'll go. 500 minus 100, 400, 400 लेके 1/3, 2/3, 3/3 किया तो लास्ट डे कितना पे करना? 1050 minus 100, 950 पे करना. Isn't it all these years are you understating the liability or not? You said my liability small बोला, but last day इतना आया. Correct na? Then you will be charging it to P&L in one shot. That's why the standard says, if it is cash settled SBP or SAR, you have to restate it every year end. Not only every year end, and on the date of settlement also. First to bring the liability to today, suppose this guy, you are all employees of my company. He is in need of money after 3 years. They will still tell time. After 3 years means last day morning only should come and they are not required. We'll give some 1 month, 2 months time, we'll give 3 months, 6 months time also will give. Whenever you feel money, I need today money. Okay, he will come. So today price is this, minus 100 karo, balance pay me sir. He'll come and take. The next guy what he'll say, let anyhow 6 months time hai na, 1 more month let me wait. Because share value may go up. Then let me go and get the good price. Nothing wrong na. Human obviously, nothing wrong. So he may wait for some time. He is lucky fellow to share value will go up. He will claim good amount. If it falls down, that is unlucky, that's all, we cannot say anything. Whatever is the, which day you come to my counter. I understood. Each guys, all of you, which day you will come to my cash counter. What me cashier will do? Today share at the spot share market value is how share value is how much? Minus 100 karo. Your eligibility 100 shares, 1000 shares. Now multiply with 1000 shares. Give the money and out. That's all. Disburse. Have you followed me or went out above? Followed na? Right. That's all. Now, so that's why at all the times, my dear, every year end you are supposed to restate and again on the date of settlement. Exam में ऐसा नहीं होता. They will say all are settled on one day करके they will tell. Practically, it's not like that. Practically, you can come one day, that guy can come, correct na? That girl may say, I will wait till 6 months. I'm very sure company will grow. And I would like to, correct na? ये money withdraw करके फिर FD कर दिया तो चिल्लर आएगा. Correct ना? I'm expecting share price will grow in 6 months में 10% हो जाएगा. बैंक में 4% also will not come 6 months में. Okay, let me hold the share. करके सब nothing wrong. People can have their own estimations and keep the right with them. But within 6 months time, you are supposed to withdraw it. Hello, is it clear? Right. So that's why. What are you supposed to do? In case of correct na? In case of cash settled SBP, right? We must restate the SBPL at every year end and on the date of settlement. Every year end and on the date of settlement. Okay. Yeah, noted. No, that's all. A restatement you are supposed to do and charge it off. I think we can start doing the looking at the sums. Yeah. Yes. Just see this based on, I mean, have I missed out something? Uh, Cash settled when the service is received, exchange, market condition, target share price, expectation. It's okay. Same thing. Yeah, a small one. That's all. Actually, I told you, na. Topic number two is small, but actually, na, majority, if you divide the questions from topic one na, two na, three na, four na, if you divide na, more questions from e topic है. SAR करके पूछेगा. Number of times compared to one, two, three, four. If you say one say two times asked, sir. Correct na. Second topic say three times must have been asked. In this one time may be asked in from third topic. Rarely asked from fourth topic. It's like that. Comparatively, topic number two is, I mean, probability is high. But anyhow, better you read all this because the chapter easy. Right. Read, my dear. Entity reporting date is equal to December calendar year. Correct? Calendar year. On 1st January 2001, yeah, the entity grants 100 share appreciation rights to each of its 300 employees. Okay. The condition that they continue to work till 31st December 2003. Okay, this is 2003 means how many years here? 2 years or 3 years? 3 years. Calendar year means dangerous. Because 1st January 2001, you can't take 2003 minus 1 is equal to 2. No, this is 1st January. Correct? The danger. Be careful. Yes. So during the 2001, yeah, 20 employees leave and we are expecting 40 people will leave further. Yeah, next also 10 employees left actually, another 20 will leave. Fine, actually left another third year mein 10 left. Yeah, the fair value of the SAR, correct na, all these on the 3 days, correct na, on the all the 3 years, different dates mein a number. Calculate the expense for the each of the 3 years of the scheme and liability to be recognized in the statement of financial position on 31st December for the every 3 years. That's it, straight. Yeah, one time if you do it, you will feel comfortable. That's all. Question number 25, page number 23. Yeah, chalo. What do you do? This is a cash settled SBP or SAR. Yeah, you write one line. Yes, as per Ind AS 102, as per Ind AS 102, we should restate the SBPL. Same line we are writing once again. We should restate the SBPL at every year end and at every year end and on the date of settlement. Yeah, full stop. Accordingly, yeah, calculation of below our table. Calculation of employee benefit expense and SBPL. SBPL. Same table here. Calculation SBPL employee benefit expense. Yeah, first one. Yeah, first one. First year. How many options are there, Mandy? First of all, 100 options for each guy. Totally 300 guys. Correct na? So first 300 guys minus 20 employees left already minus 40. Correct. And each guy will get 100 options. Options. Correct na? Yeah. And what is the worth of it? 10. And does he need to work for 3 years? Yes. So 1 by 3. Huh? 80,000. Then 80,000. Yeah. Year 2. Year 2 what? 300. 20 already left. Another 10 also left. Expected to leave another 20 into 100 options. Now what should I do? 10 or 12? 12. That is the matter. Okay. 12 into 2 by 3. How much, Nana? Okay. 2 lakh. Means 1,20,000 will be the charge for the current year. Yeah. Third year. Third year 300 minus 20 minus 10 minus 10. Into 100 into 15 into 3 by 3. Yeah. That whatever highlighted. Are they important? Correct na? So equity settled SBP mein so far, are 10 10 10 10 you wrote. Cash settled mein you're restating it. Because liability, the more the price increases, my liability to pay the money is going up. If you don't do it, that means you are understating the liability or overstating, whatever it is, depending on the situation. Right. Tell me, my dear, SBPL. 3 lakh? 1 9. Okay, 3,90,000. Yeah. So that is equal to 1,90,000. That's all. Correct, na? Yeah, he has not given at what date it settled or something like that. Not a problem. Correct, na? Right. Some journal interest, liko. What is there? Employee benefit expense account debit to SBPL. Advisory on settlement. SBPL account debit to cash. Yeah. Is that fine? Right. Chalo, next question. Question number 26. ABC issued 10,000 share appreciation rights that vest immediately to its question है wrong. It's okay. चलो क्या करना? Correct ना? ABC Limited 10,000 share appreciation rights vested immediately बोला. क्या बोला रे? Immediately vested. Immediately vested means you guys can come today only, can take money or not. Correct na? See the funny thing. To its employees on 1st April 2015. That means if it is vested immediately, I should charge 100% to P&L right now. Only the increase decrease subsequently. Are you getting my point? Right. The SARs will be settled in cash. Correct, obviously. At that date, it is estimated using an option pricing model, whatever the model. Okay, the fair value of the SAR is equal to 95. Yeah, fair value of the SAR is equal to 95. SAR can be exercised any time up to 31st March 2018 bola. Correct na? Okay. How many, when is that you did? 2015. Means 3 years time is there. In 3 year time mein, you can come any time and take cash and go. Is that the point he's telling? Exactly. Now, at the end of the period, 31st March 2016, it is expected that 95% of the total employees will exercise the option. Array, 96%, okay, 95 or 95. Suppose, Nana, you are the employee of the company. It vested immediately, 31st March. You got an offer from other company. Correct? Yeah? What do? Exercise first. Cash settle it have already vested na. You only told any time up to bola. First to go to counter, take the money, then resignation dal do. Agree or not? But see, this fellows will do opposite. Correct? They will say 95%. 95% to kya? Have you told like you can exercise after 3 years? No, na. You told very clearly in question any time. That's why I told not correct. But okay, follow them. That's always it like that only. You want mark or not? Follow. That's all. Yeah, few places it will be like that only. At the end of the period, 31st March 2016, it is expected that 95% of total employees will exercise the option. Okay, 92% of the total employee will exercise the option at the end of the next year, and finally 89% is vested. What vested? You already told vested and already at top. Immediately vested bol diya. That's what? No, not sinking. Right. Only at the end of the third year. Fair values at the end of the each reporting period has been given below. For this answer is given what you know. They charged 100% to first year. They said you vested immediately on the top. Correct. But why below you said again vested? Meaning illa. Fair value of the SAR. Okay, 16, 17, 18 something given. Pass the journal entries. That's all. Our question that's all. Our question is that level only. Chalo, we'll record the journal entries. What is there? Yeah, question number 26. Page number 20, 24, okay, 23. Yeah, you're right. As per Ind AS 102, when SBP is vested immediately, it should be recognized. I mean, it should be recognized. Yeah, it should be recognized in P&L immediately. Bracket by 100%. Correct? Right. And SBPL should be restated at every year end till the date of settlement. At every year end till the date of settlement. Chalo. So what is the table? First you will prepare calculation of SBPL and employee benefit expense. Yeah, year dates you use calculation SBPL employee benefit expense. Yeah guys. Chalo, first year means which date? 1/4/2015. First day. Vested, na? Yeah, immediately vested. Full expense. Full expense means how many options he gave? Huh? Correct. Sorry? 10,000, correct. But he said 95% only will satisfy. Correct, na? 10,000 into 95 in, sorry, what is the option price? I don't know. La. One second, I'll read it. No, sir, fair value on this date. Hmm. At that date means E date. 1/4. 1/4, sir value is equal to 95. Okay, 10,000. And SAR can be exercised. One second. At the end of the period, it is 95%. Sorry. Okay, na? Right. No, I thought wrong way. Yeah, 100%. That's all. No 95%. You can say 100%. No information given. No information given. So 9,50,000. 95% is at the end of the first year, not on the date of vesting. Yeah. So 31st March 2016. 10,000 options, correct. Yeah, into what is the fresh rate? 112 fresh rate, and 95% is your expectation, correct na? Yeah, 112 into 95 percentage. Yeah, it comes to how much, my dear? 10,64,000. Yeah, increasing. Difference is 1,14,000. Yeah, 31st March 2017. Yes, 10,000 shares into 109. Yeah, what is the percentage they said? 92 percentage. It comes to 10 lakh. Okay, so minus number. It's falling down, na? How much? 60, 61,200. Negative number will come. Reversal entry. Yeah, last year, 31st March 2018. 10,000 options. 114 into percentage 100. Yeah, 89 percentage finally. Yes, 89 percentage. How much na? 10 lakh? Okay, so positive. 10,000, 11,800. That's all. Now journal entries you can write fat. Just copy paste the number. Correct na? Right. Journal, he's asking journal entries. Yeah, year 1, year 2, sorry, year 0, year 0, year 0, year 1, year 2, year 3. Yeah. So employee benefit expense account debit to SBPR. Huh? Oh, sorry. Yeah. PL 9,50,000. Yeah. Next year 1,14,000. Yeah. Here hyphen dal do 11,800. Yeah. SBPL account debit to employee benefit expense 61,200. That's all. Fine. Yeah, I mean here assumption is like all the people have settled last day, right? Fine. You can write like at y at which day? 31st March 2018. All settled. Yeah, SBPL account debit to cash 10,14,600. 600 na? 10,14,600. Right. And one more small information I'll tell you, 2 minutes. Done. Right. We'll go to the other question and answers and we'll try to, in the given time, 20 minutes may we can close at least a good number of question and answer because solution is already there. Read the question. Any small point is there, we'll use our calculator. Rough calculation we'll do. Check with the answer. Then at least, okay, we know it. Okay, done. TDS wala what they'll do to employees? TDS dena na, cut karna na obviously. Yeah, when you give the, what is this? ESOPs and all when you give, is it a remuneration to them or not? Yeah, pakka remuneration. There is no doubt about it. That obviously TDS is applicable to them, right? TDS is applicable to them. What do you do in this TDS case? It can happen two ways, Nanda, generally. Suppose I offer you 1,000 shares, 30% tax rate for you. You are already in 30% bracket. Minus, I may say, a company will say, 1,000 shares I don't give you, 700 shares I'll give you. Hello, understood? 300 shares worth will be there, na? Whatever, that they will deposit with the government. So what will happen to you now? You at least cash outflow will not happen. Arey, samajh mein aaya? Right. If you employ, it is depending on the company policy or employee, that is an understanding between the people. Well, otherwise, what can happen to the employee? What he can say, no, give me full 1,000 shares, I will pay you. My salary you have to pay me na anyhow. इसे cut करो. Or every monthly something, some number you cut करके correct pay to government, no problem. Are you getting my point? Yeah, automatically when I say income is equal to 1,000 shares, worth is equal to today rate something, if I apply, TDS will be going up. Or more amount will be deducted from the anyone, they will handle it. Fine. Yeah, that journal entries and all not required. Normal journal entry only will come TDS ka. Two ways I told you. One is give the less number of shares. Means 70% of the shares you give it. Don't give the, so that don't cut the tax. Next, income tax department will allow you from your point of view. TDS is from the employee point of view. I am telling from the employer point of view now. Second situation. Is it expenditure to you or not? Yes or no? But which date rate they will take? Date of settlement, date of issue rate they will take. You are issuing at what price? Exercise price 50. Today fair market issue date, not grant date, issue date. Okay, understood? What is the fair value of the share today? Our difference will be allowed as a charge. That is the benefit expense, employee benefit expense you are providing it to them. Correct? You are giving it to them. They will go by intrinsic value, but not on the grant date. Intrinsic value on the date of settlement. Sir, but I will be making I will be every year you're asking me to charge employee benefit expense account debit to SBPR. Correct? You're telling na Allah defer tax because when you charge it, I will not give the benefit. Do I allow as a deduction now? No. 3 years are there, but income tax department will not bother about 3 years. Income tax department will bother about third year, last day settlement issue time. Issue time mein they will bother. Correct na? But accounting standard, Ind AS will be teaching. Accounting every year you will be recording it. So automatically, what will come? Deferred tax will come. Correct na? Because deferred tax, asset or liability, asset can come. Why means since expenditure is not allowed, you will end up paying more tax. So it's an asset to you. But you will enjoy the benefit little later. That time enjoyment may be little more or less. It doesn't matter. Whatever you created deferred tax asset so far, all will be reversed on the last date. It has to be reversed. because SBP ने close हो गया ना. That's all. Something like that. Anyhow, इदे topic, इदे SBP are related. Today I told you in 2 minutes, correct ना? Under Ind AS 12 income tax, that is direct tax में we have one page and one question also I have incorporated there with respect to SBP. 12 has one separate paragraph how to deal with respect to SBP. Understood? Right. So once again you need to recall it, not today, at later point of time. But just orally I told you, we recognize the expense for 3 years. Department will not allow expenditure for 3 years. Department will allow expenditure last day. One time, that too on the date of issue. And what amount they will allow? Not what you charged. Actual, the date, our date, what is the value minus exercise price. That is what you exactly lost. That day spot mein book karo. Hello, understood? Alright. So what we charged will not match with what they allow. 100% will not match. Nothing to worry. That is what deferred taxation and everything will come. How to take care, we'll take care later. Chalo. Anyhow, shall we go and look at the sums, my dear? Before going to third topic number 3. Practice questions. This you only try it. Question number 1. I don't want to do it. It's easy one. Just so much big one is how many people left coming, correct na? That's all. How many people that, oh, you're not able to see. Yes. Yeah, yes, my dear. Question number 1. Are you comfortable? Correct na? Easy only. That's just all that is in number of employees. Correct? Right. Question number 2. Yeah, read after Ind AS 103 business combination. So it will, I mean, leave it. So linking will be there. When you come next round on your own, you mark it at least. Okay, some a double star, triple star, you do it so that next time when you come, na, second revision, at least mandatorily you touch it. That's it. Ha. This is market condition. Yeah, it's easy one only. Entity P issue share-based payment plan to employees based on the below details. Number of employees are 100. Fair value of the on the granted date is equal to 25. Market condition, share price to reach 30 rupees. Okay. Service condition is you have to be there in the service until the condition is fulfilled. Expected completion of the market condition is equal to 4. First of all, is the market condition or not? Correct now. Market condition may, right. So already you are 25 rupees. Today, yeah. 25 rupees is the number. It is already considering the 4 years of expected time. Correct? Yeah. So you are supposed to charge it off in 4 years time maximum. But below information you see, market condition is fulfilled in third year. Then you don't have a choice. You have to close it in third year. Means what you will do? 1 by 4, 2 by 4, 4 by 4. Hello, understood? First year I don't know whether it will satisfy or not. So first year what should I do? 1 by 4 because I expected. Second year also 2 by 4. But third year में finish किया. Finish किया तो waste हो गया. Waste हो गया तो balance amount should be charged in ना. So directly 4 by 4 will come in the third year. Have you understood? Arey, that is small only, but that is only major. Correct. Now if you do their mistake, gone no. I said maximum 4 years only, but if it is vested before, you don't need to wait for fourth year, you don't need to pass journal entry. It's already vested at the third year. Agree? Right. Suppose, right, have you understood here? Yeah, what did I say, Nana? 1 by 4, comma, 2 by 4, last one is 4 by 4. Over. Next, suppose sir, no sir, fifth year mein we did the job. No problem. Fifth year किया तो what should I do? 1/4, 2/4, 3/4, 4/4. Fifth year क्या करना? कुछ नहीं करना. You will not be recognizing any expenditure. Correct. Fifth year it is going to be nil. Yeah. See the answers. Yeah. By 4/4. I mean 625, 625. Remaining amount is 1250. You charge it in the first situation. Situation 4 mein what do you do? Right. 625, 625, 625. Last year it is going to be 0. What you should do it at home by taking some 10 minutes, 5 minutes, something like that. ये क्वेश्चन में क्या न्यू पॉइंट क्या है? You can write in your own word na. Market condition expected 4 years. Right. Assume situation 1 completed it, correct na? Vested in 3 years, vested in 5 years. Yeah, what should I say? Right. 3 years you wrote na. First year 1/4, second year 2/4, third year 4/4. Likho over. E side satisfied in fifth year. Correct. Now what you write first year? 1/4, 2/4, 3/4, 4/4. Fifth year nil. No expense. One small like na 4 lines, 5 lines में summary कर दिया तो you don't need to come back and read this question once again. Isn't it just calculation is different? Other than that, all journal entry, normal, everything is normal na. That is what your 10 minutes or 5 minutes what you spend now will correct na. Now 10 minutes less valuable to you. Either 10 minutes before exam more valuable to you. Agree or not? That time e 10 minutes will become 1 minute may I am able to close it. Aren't you happy or not? Obviously you'll be happy. That extra work you are supposed to do. During coaching time somehow, yes, some half an hour, 45 minutes you have to take out. The extra work you do will be very much helpful to you. Right, think about it and do it actually, my suggestion. Right. Question number 4. Entity X grants 10 shares each to its 1000 employees on the conditions as mentioned below. Remain in service and PAT should be non-market condition 100 million PAT. Okay. It is expected that PAT should reach 200 million by end of the third year. Expectation day 1. Fair value on the grant date is 100. The employees expected for vesting at the first year is equal to 97, 95, 93 percentage. Calculate the expense for the 3 years. Normal no? Correct na? Right there E and likho. Don't look at it again. At home what you do? You use calculator once and close it. Never ever come back. Normal thing. Right? This is topic 3 pa. This is topic 3. Okay. Topic 3 question. Share alternative price. I mean if you want share they will give. If you want cash they will give you. That we will see. Topic 3 I have not done. Only 1 and 2 topic questions only we are doing right now. Yeah, tomorrow we'll do topic 3 and we'll come back to that question. Right. Minda issued 11,000 share appreciation rights. Topic 2 related. Yeah, that vest immediately to its immediately. They question nodi ade whatever. Same as your earlier question. Correct? Just read through. SARs are using the option price model on this date. Correct? Now on that date if the price is equal to 100. Yes, exercisable at any time. Same question. Correct na? Same question. Fair market values there. There they gave in a table. Here it's given in line. That's all. Right? So that I don't need to do. Yes. Yeah. This you can see. I mean, yes. Question number 7. The following particulars in respect of the stock options granted by a company are available. Grant date 1st April 2008. Number of employees covered is equal to 50. Number of options granted per employee is equal to 1000. Yeah, fair value of the option per share on the grant date is equal to 9. Sorry, no problem. Right, the options will vest to employees serving continuously for 3 years from the grant date, provided the share price should be 70 or above. So market condition, correct na? Right. So underline this. Somewhere you write market condition. Yeah. Yes, 70 or above it should come. The estimates of the number of employees satisfying the condition continuous employment is equal to, maybe initially 50 are there. We are estimating at the end of the first year 48, 47. Correct. By end of the day only 45. Share price at the end of the 2010 11. Okay, share price. How much happened? 68. Compute the expense to be recognized. Means have you satisfied or not satisfied? Not satisfied. Correct. Na? Everything lapse. I mean, obviously you are not, it is not vested. Hello, vested or not vested? Not vested. So now what do you do, my dear? Last day, what are you supposed to do? They are asking expenditure. Compute the expense. They told I prepared expenditure. The table I completed. Last day, what should I do? Last day, reverse it. Reverse it. Because it is not even vested. A vested one, you write it with the pen there only. Last day. First you record the expenditure and I mean reverse it towards the end. A vested thing, if it is lapsed, transfer it to retained earning. Is it vested or not vested? Not vested. During the period, unlikely to happen, it may not happen, it will happen, that you should not consider. That is what we understood, we wrote also. Correct? Now, during the vesting period, if I am estimating correct, you should not change period of the vesting, you cannot change it. Correct? Now, it may be unlikely, that's why I want to reverse. No, that all should not happen when the market condition exists. That's all. But first you should charge off all the years properly. Last day not vested, reverse it. And again, here dates are what? 31st to 1st April. Practically, correct na? All grants will not happen on 1st April. No. Are you getting my point? Maybe 30th June will be there. But you must have charged on 31st March already. Hello, correct? 31st March में charge करो. 30th April देखो कुछ नहीं हो रहा है. Okay, that day you have to cancel it. I mean cancel in the sense reverse it. Is that clear? Right. So, chalo, we'll see the remaining questions. How many are there totally? 13 or 14? 13th one we did. 14, no? 15. Oh, how many? 18 questions. So, you already did 8 questions approximately. 13th already done. Correct. Na? Yeah. Correct. And again, 1, 2, 3 questions will be other topics. Yeah, first we will finish these questions tomorrow. Then we will go to topic number 3. Topic number 3, topic number 4 will not take too much time. Topic number 3 only 1 hour. Topic number 2, that also will not take. It will go very faster. Chalo, we'll clear it. Try to clear at least tomorrow.